introducing myself, my name I've already told you, my name is Huzaifa Hedri. I've done ACCA back in June 2012 and completed my ACCA at the age of 21. So right now I'm 23. Okay, so besides that, I've done my MBA as well. After completing my ACCA, I got exemptions. I did my MBA from Pakistan. Plus, right now I'm pursuing another finance qualification, that is CIMA, because when you do ACCA, you get a lot of exemptions in the other qualifications around the world. So when you guys would have attended the session that we conducted, that you might know that once you are done with your first finance qualification, it opens the door for you for the other finance qualification present in the market. So that's a very good thing. The mutual understanding between the finance qualification, whether it's ACCA, whether it's CIMA, CMA, CIA, CPA, all the finance qualification present in the world, they have very good understanding between them. So once you are done with this qualification, you can move on to the another qualification, because CPD, that is known as Continuous Professional Development. As you can see, these two guys are working people over here. This gentleman is working guy over here. But still, they are studying. So that's called CPD, Continuous Professional Development. They are developing their skills. She's an engineer. Now she's moving towards more accounting and management field. So that's called Continuous Professional Development. You can move on to different finance qualifications. So Foundations in Accountancy has 7 papers that you guys would be doing, right? So initial 2 papers you would be doing. First of all, we would be going through the very first paper, that is MA1, Management Information. Now talking about the paper, the Foundations in Accountancy is divided into 3 different certificates. That is Introductory Certificate in Financial and Management Accounting, which has 2 papers, FA1 and MA1, as you can see over here. Plus you can see FIP, that is Foundations in Professionalism, a small online module. When your ACCA account will be created, you will have access to your account. You will see that you will be having an online module that you have to complete. You have to score above 50 in that. After completing these 2 papers plus the module, you will be getting your first certificate, that is Introductory Certificate in Financial and Management Accounting. Moving on further, you would be having further 2 papers, that is FA2 and MA2, Financial Accounting 2, Management Accounting 2. Then you would be getting a certificate. Then you don't have to do Foundation in Professionalism again. You only have to complete it once. So once you are done with it, finish. Then you would be having Intermediate Certificate in Financial and Management Accounting, and after completing the next 3 papers, you would be having your Diploma in Accountancy and Business, or you can say the FIA qualifications, right? So thanks again. Now moving on further, as we have discussed this, the FIA suite of qualification is designed so that a student can progress through 3 different levels. We have already discussed that, that is introductory level, intermediate level and the advanced level. After doing the advanced level, you will be getting your Diploma in Accountancy and Business. But you guys have a choice, but it's good to start from this route rather than going directly to ACCA, because for people, those who don't have the accounting background, and even those who have the accounting background sometimes face real difficulties even in these papers, the real basic one. So how can you imagine to do any advanced level directly? Though you have a choice in that, but it's difficult. Please close the door. Okay, it's difficult for you to go directly to the advanced level, because as the name suggests, it is more advanced compared to the more basic level. And the FIA is the Foundations in Accountancy, the foundation. Now if I ask you a simple question, you are constructing a building, right? You're constructing a building, you make everything perfect, but if your foundation is not good, can the building last long? No. So that's the thing. That's the thing over here. And you have made a right choice by starting your career for ACCA with Foundation in Accountancy rather than going directly to the advanced level, right? Now, this is your complete FIA for the management accounting. We have financial accounting as well as the management accounting in FIA. So, I will be discussing about management accounting because I am your instructor for management accounting paper. So, you have three papers over here: management accounting 1, management accounting 2, and fundamentals of the management accounting, MA1, MA2, FMA, right? So, we are over here, that is your first paper, MA1, right? We are over here, that is your first paper, MA1, which will be taking you towards your next paper, that is MA2, which will be taking you to the next level, that is your advanced level, FMA, or fundamentals of the management accounting. So, this is, you can assume that it is a very basic paper, very basic, because it is starting you from the scratch. This paper assumes that a student doesn't even know anything about accountancy, about management accounting, about financial accounting, nothing. You don't know anything. So, it's a very good advantage for you that you would be starting from the very scratch, right? Now, the aim of the paper is to develop knowledge and understanding of the providing basic management information. The word basic is again and again emphasized because it's a very introductory paper, but don't be overconfident by assuming that it's a very introductory paper, I can easily clear it off. Some students do that, but some even face difficulties in these papers as well, because obviously it's an accounting paper, so it will be having some technical areas, right? So, you need to be focused in the class, be focused on whatever lecture I am delivering and have a full attention in it, right? Now, if I tell you about my journey towards ACCA, even I started from this route, the FIA route, and I scored in this paper specifically, I scored 88, and I was from engineering background. I didn't have any knowledge of what accounting is, what debit is, what credit is. So, obviously, some of you are coming from the accounting background. So, if you strive hard, you can score really good in these exams. And it's not like that it's a very basic paper, so your score wouldn't matter if you go to the market with this qualification. No, it will definitely matter. More number of certificates you have, more value you have in terms of the job security, right? So, speaking about the syllabus, we have different areas in this syllabus. We will be talking about this area today, that is the nature and the purpose of cost and management accounting. What basically management accounting is, what an organization is. So, we will be talking about that in detail. How do we use management accounting and what's the purpose of using management accounting in any particular organization. Then we have section B, which tells you about the source, document and coding, that what different documents are there in an organization relating to accounting and how do we code different items in an organization. Cost classification. Cost accounting is the major branch, very core integral branch of management accounting. So, our all focus in this course will be on cost accounting. Cost accounting means how to formulate a cost of any particular product. That if you are planning to sell a product, so you need to know what is the cost, then only you can set a selling price for that, isn't it? So, for that you need to know cost of the product, and to calculate the cost of the product you need to be familiar with the techniques of the cost accounting. Then how do we record different cost? Section D, providing information to the management, because obviously the purpose of getting the information is to provide it to the management so that they can take proper decisions on them. And in the end, the use of spreadsheets. Okay, how many of you are familiar with Microsoft Excel? Okay, if I rate the skills, is it beginner, intermediate or expert? The skill that you guys are familiar with MS Excel, Microsoft Excel. So how would you rate yourself? Beginner, intermediate or expert?
I did the advanced level also.
Okay, so you can rate yourself as an expert in that. Okay, so you know all the formulas, how to apply the formulas, cell references and all of those things. What about you? Intermediate. Okay, that's good. Doesn't make any difference because even those who don't know, we're going to take it from the zero. Right? Now, these are your areas of the course in detail, that what chapters are you going to face in different areas of the course. So, in area number 1, you have 2 chapters, nature of business organization and the accounting systems, that what nature of the business is and how accounting system will affect the different natures of the organization. Nature and the purpose of management information, that when you are providing management information to the management, what should be the qualities in it, what's the main purpose of it, how would you make a management information useful to the management, right? Then source, documents and coding. We have 2 chapters in this area, section B. Sources of information, what different kinds of sources we have and how do we code the particular items or particular products that a company is producing, right? Section C, cost classification and measurement, a very important area of your course. Examiner love to examine question from this area. A lot of questions are coming from this area. We will be discussing about the pattern of the exam as well after this. So, cost classification, different classification of cost, how do you classify the cost and what are the different behavior of the cost that you are going to face, because obviously when you are talking about cost accounting, our main focus should be on cost, that what are the different kinds of costs we have, what are the different behaviors of the cost we have, how can we save the cost by identifying the different types, right? Cost units, profit center, cost center, investment center. It's basically responsibility accounting, that you divide your organization into different centers and held accountable the manager of that particular center for the cost, for the profit, for the investment. That okay, you are the manager of cost center, tell me about cost. You are held responsible for the cost. Why the cost is more than the budgeted, right? Then recording cost, 3 major areas: material, labor, expenses, accounting. Providing information. In information provision, we will be mostly discussing about the variances. What you have planned, what you have actually achieved. So this is the variance. Is the variance favorable to the company? Favorable means beneficial to the company. Is the variance non-favorable, adverse to the company? So we will be discussing and how to interpret the variances. And in the end, the spreadsheet system, or you can say in other words the Microsoft Excel we will be talking about, right? Approach to examining the syllabus. Your exam will be consisting of 50 marks, 50 MCQs, 2 marks each. So there will be total 100 marks. 2 hours will be there, 120 minutes. So 120 minutes, 100 marks. On each MCQ, you would be having 1.2 minute. But it's not a hard and fast rule that you have to do each MCQ in around 1 minute. Because some MCQ, let's say a definition is examined. You read the question, you know the definition, it will hardly take 20 seconds for you to answer that question, right? But some MCQs, there will be a long question, they will even take 3 or 4 minutes to solve for you, to apply the formula, to gather the data and to get the answer. So you have to manage the time effectively, because I'm teaching this course for the 4th time and I have came across a lot of students who fail to manage the time, because it will be a computer based exam. The clock, the time of the exam will be there in the software. It will be going out slowly and gradually, and as the time goes 0, your exam will be automatically closed. So it's not like a manual exam that you can say please give me 5 more minutes, please give me 10 more minutes. So it will be a computerized exam. As soon as the time goes out, your exam closes. So you have exactly 2 hours. Neither you can make any claims that we didn't get enough time. So it's a fair game. Complete 2 hours, 100 marks, and passing marks are 50. 50% are the passing marks. It means that you have to correct only 25 MCQs. But even then, some of the students fail to do that in this basic paper. So the point is, if you can work hard, I know some of you are working people, so you need to manage your time with your job and the studies, but obviously this is life. You have to manage the time, you have to manage the things. If you are here, you're here to study, and when you have taken the admission, you have decided that okay, I will do this qualification, then there should be no excuses that okay, I didn't get time, I didn't get this. Even for those who are not doing any job. So sometimes I have great students, those who have scored even 84, 82, but none of my student has yet beaten my score, 88. So I hope some of you does that. So that will be a really good thing for me. So your target should be 50, bare minimum. What I want from my student? At least 50. I don't want any one of you to fail, neither of anyone you want to fail. Obviously, no one will go into the exam with the intention to fail, right? So what I want from you guys, pass the exam, at least 50. But 50 should not be your target. 50 should not be your target. The minimum should be 50. 50 should not be your target. Your target should be 80s, 70s, even 60s, acceptable. But 50 should not be your target, right? So, moving on towards the first chapter that we have to discuss today, that is the business organization and accounting. These are the learning outcomes that we will be discussing in this chapter today. What is an office? What is an organization? What is a policy manual in an organization? How does the transactions take place? And what are the controls we can have on those particular transactions? Double entry bookkeeping, although you guys might be wondering, this is a management accounting paper, so why are we having double entries and all of those things? It will just be an introduction, because sometimes double entries related to management accounting can be examined in your exam, so we need to know the basic concept behind the double entry bookkeeping system, right? Cost ledger accounting, a major part of this chapter, and in the end the computerized accounting system, that what we will be discussing based on the computerized accounting system, how computerized system can help us in the management accounting field. Now we talk about organization. I know the definition is in front of you, but that is in bullet points. So any one of you would want to define organization in your own terms. Obviously you can use mine, but how would you define organization? Organization, not organization of anything, organization means a company. So how would you define an organization?
Yeah, this is a structure.
Okay. Anyone else?
The structure can be defined to the nature of the business.
Okay, sorry, I didn't get you. Okay, you can say that, a firm made for the purpose of profit, right? So the way I define organization, it is the first thing, it is a social arrangement. What is meant by term social? Human beings. So it's a social arrangement. It's an arrangement where there are human beings. Obviously no organization can work without human beings. So it's a social arrangement with the purpose of collective goals. Can two people working in an organization have a different broad goal? Obviously the main goal of the organization is to make the profit, right? So if a person A is there and a person B is there, both will be having the same perspective, same approach, same goal. Okay, this is what the purpose of the organization is, to achieve the profit. It controls its performance and has a boundary. Now we talk about this institute, right? We talk about this institute. This is the villa. Beyond this villa, this institute will end. So it has a particular boundary within which the organization exists. So if we arrange these 4 bullet points, we can define an organization an organization is a social arrangement with collective goals and it controls its performance within a specified boundary. So this is how you define an organization, right? Now, any confusion over organization? Great. Now, in an organization, we are having different offices, right? Small offices for different individuals. So, the term, the definition that examiner uses for office is that is it a center of information and administration. Because let's say you are going to a job, you're going to an office, you get information from there, and offices are the main area from where the administration takes place. You administer the complete organization from your offices. Okay, this is the performance of employee A, this is the performance of employee B. They have worked this much hour, they have worked this much hour, right? So this is how you gather the information in an office and control the or administer the complete organization from one center point, right? The following functions, those of you who are working people, they know that the major functions in an organization: purchasing department, those who make purchases of raw material for the goods to be manufactured; human resource department, three purposes they are there: hiring the employees, firing the employees, training of the employees. Okay, so three purposes are there. Administration, looking after the administration work of the organization, to administer the organization, to organize the company. Finance department, obviously those who are making the profit, where does the profit go, how it should be distributed among the employees, how it should be distributed among the shareholders. And in the end, selling and marketing department. You have made the product, manufacturing is good, finance is good, administration is good, and HR is good, you have the best employees. But if you are not marketing your product, you are not making your product available at the doorsteps of the customer, you cannot sell your products. So each of these departments are integral and the core component of an organization or an office. Now, organization chart. What do you understand by the term chart? Any one of you? Chart, graph. Sorry? Okay.
A kind of pictograph
representation of anything, you can say that. So, in an organization, you have different structure, as you said. You have different structure in an organization. Now, if I am hired in an organization, so the scenario should be like this: I would be going into the organization, trained into the organization, getting formalized with the procedures and the policies of the organization, because there is a particular structure in an organization. Now, can it be like this? Okay, I get hired in an organization, I'm going with my own choice, sitting anywhere, doing anything? Obviously not. So, in an organization, you have an organization chart which represents you who will be doing what and who has how much authority. So, if you look at the definition of an organization chart, it shows you the structure of the organization and various roles within the organization. It shows you the structure of the organization. The structure of the organization can be like this. First of all, the head is chairman, then comes the CEO, then comes the departmental heads, GM, regional managers, departmental heads, then managers, senior managers, junior managers, then the supervisors. So this is how the structure of the organization is. That who would be coming under whom and who has how much authority. Whose role is what? That will be defined by the organization chart. Now, we have three usefulness of an organization. The first thing is distribution and the division of organization. Because as I gave you an example, you cannot just walk into an organization and do whatever you want to do. You need to know that what your responsibilities are, what is your area of control, what is your area of authority, and what you need to do, right? So the first thing is distribution and the division of the organization. whom to communicate with, and what are the reporting channels. Like I said, if I am a supervisor, I am at the lowest level, I should report to my junior manager. The junior manager will report to the senior manager. The senior manager will report to the general manager. General manager will report to the CEO, and this is how the chain of command goes. Authority and responsibility, we have discussed that if you are a supervisor, you will only be liable, you will only be having authority to supervise certain number of employees. But if you are a chairman, your authority will be much greater as compared to any other person into the organization, because you will be looking at the organization as a whole, right? Now, when we talk about organizational charts, we have different kinds of charts, or you can say we can split an organization into different ways. The first one is the functional departmentation. Okay, the first one is the functional departmentation. Excuse me, sit over here because you won't be able to see the book. The first one is the functional departmentation. Functional departmentation means you are splitting the organization, or you are dividing the organization on the basis of various functions in an organization. What different kinds of functions we have discussed? Sales is there, purchasing is there, marketing is there, HR is there, finance is there, production is there. So whatever function the organization is doing, they will be dividing the organization into the different functions or different capabilities of an organization. You can see. Now, then again, those functions will be subdivided. How? Let's say sales is a one big broad department. Under sales, we will be having marketing, we will be having advertising, right? Okay. Similarly, under finance, we will be having management accounting, we will be having financial accounting. So the first thing, as you can see over here, it is the basic function. The basic function means production, marketing, finance, or personnel. Personnel is the other name of HR. Okay, personnel is the other name of HR. And under those basic functions, we will be having the secondary function. These are the further parts of the basic function according to the organizational needs or operationals. Like for production, we can have production planning, research and development, quality control, material handling, right? So this is how an organization will be first of all divided into different functions, and those functions will be subdivided into different subdivisions, right? So you can have example like this: CEO, then production head, finance head, marketing head, personnel head, and under marketing you would be having advertising, sales, market research. So this is how you divide the organization on the basis of functions. Function departmentation, any confusion, anyone? Everything's clear? Great. Product departmentation. How many of you know the companies like Unilever, P&G? Have you guys heard the names?
Yes.
Unilever, P&G. So let's say Unilever, take an example of Unilever. Okay, so Unilever, how many products are there of Unilever? A lot of products. They're dealing in cosmetics, they're dealing in shampoos, soaps, different products of areas. So when they are dealing in different products, let's say they have 3 departments. Just take an example: shampoos, soaps, cosmetics. So they will be dividing their organization on the basis of their products. Cosmetics department, shampoo department, soaps department, right? So when you divide your organization on the basis of different products that you are producing, because you will be having different product lines, it might be interrelated to each other but they will be separate. So you will be having different product lines, and those product lines will be divided into the chart of the organization. Now, how it will be divided? Let's look at the definition first. When grouping of activities and departments formed are given name on the basis of the products manufactured in an organization, it is called products departmentation. It is applied where there is a large range of products are manufactured. We take an example of Unilever, huge product base they have. When there are several product lines and each product line consists of variety of items, functional classification failed to give balanced emphasis on each product. That's the major thing why you would want to distribute or why you would want to divide your organization on products. Because let's say we took an example of Unilever, cosmetics, shampoos. So for cosmetics, you will be having a different CEO. For shampoo, you would be having a different CEO. Then for cosmetics, you are having a different MD. For shampoos, you are having a different MD. So there will be duplication of efforts. So for that, you can do is you can divide your organization on the basis of products.
Type of the items or product.
Exactly, because if you what you can do is you divide the organization on the particular product. The responsible person for that product will be focusing only on that product rather than looking all of the different products as a whole. Let's say right now you are doing only one course, that is MA1 Management Accounting 1. If I say to you do all the 7 courses all together, obviously you would be saying what the hell am I saying? How it will be possible to manage all 7 courses at the same time? Isn't it? So you focus on one area which will give you better results, right? So looking at the second part of the definition, apart from this use, product and services may be made the basis of major divisions by a departmental store, a banking concern, insurance company. Again, manufacturing and marketing department may subdivide their activities based on the products. So this is how you divide your organization on the basis of different products. Let's say you're working Samsung. Samsung is producing TV. Samsung is producing LCDs, LEDs, mobiles, tablets, fridge, washing machines. Different products are there, right? So you can have, like, this is the CEO of Samsung. Then we have head of TV division, head of AC and refrigerator, head of computers, right? So you divide the organization on the basis of the product. So we have discussed how many types? 2 kinds of departmentation: function departmentation and product departmentation. Excellent. The next one is geographic departmentation. Continuing with the same example of Unilever, how many countries in the world do you think Unilever provide the products? They are here in Middle East, they are in Europe, they are in South Asia, they are in Australia. So not even countries, they are covering the continents. They are covering the continents of the world. So wouldn't it be better, let's say if I am saying that tell me the complete profit. So they are telling me the complete profit of Unilever. Okay, they are making a profit. Just giving an example, let's say Middle East is making a profit, Europe is making a profit, Asia is making a profit, Australia is in a loss. So if you wouldn't have divided your organization based on the geographic area, would you be able to identify which area is making a loss? No. So it's better to divide your organization when your reach is a global reach. It's better to divide your organization on the basis of geographic departmentation. Let's look at the definition. Like the product basis, geographical regions are adopted for main divisions as well as for the subdivisions purposes. When activities of an organization are physically dispersed means distributed in different location, territorial departmentation is adopted. Territorial departmentation is the other name for the geographic departmentation. Units that are located at different areas are made so many self-contained division of the organization. Now what they are saying over here is this, that like in Middle East there will be subdivisions, Qatar department, UAE department, Bahrain department, right? Saudi Arabia department. And then again in Saudi Arabia they will be having different departments, Riyadh department, Jeddah department, Makkah department, Medina department. So again in that city they will be having different areas. So there will be major division, then subdivision, then subdivision, then subdivision. So it's a better to have and it will give you a better understanding of the business as well, that which particular area of your business is in a loss or not performing well, right? So how would you do that? So we have a one CEO covering, then we have head of north zone, head of east zone, head of west zone, head of south zone. Just a common example. Major transactions in a business. Now when we are talking about business, we are talking about any business. These are the transactions that you will find in every business, every. Making sales, the first one. Making purchases, paying expenses, paying the employees, purchasing of non-current assets. Purchasing of non-current assets. Now sales. When you are making sales, what different kinds of sales can you have? When you are making a sale in a business, a normal course of business, so what different kinds of sales can you have? Cash sales, credit sales. Now when we talk about cash sale, okay fine, you make a payment, they give us cash, sale is closed. But when we talk about credit sale is a much more complicated thing at this stage, at least for you to understand. How? Let's say you're making a credit sale. If it is your existing customer, okay fine, you can go ahead without any proper authorization, or even if authorization is a policy of the organization, it will just be a formality. But if you are making a credit sale to a new customer, you have to assess the credit worthiness of that customer, and that is where the head of the organization will come in between and assess the complete scenario, that whether the sale should go ahead or not, right? Now what about making purchases? How would you initiate a purchase? Now because the thing is, let's say you're working in a car manufacturing company. You're working in a car manufacturing company without purchasing, let's say you are outsourcing the engine, without purchasing the engine, can you make a car? Obviously not. So you have to purchase the engine. Now in order to make sale, the point was, in order to make sale, you need to purchase first, right? You need to purchase first. How would a purchase take place? Sorry?
Request to purchasing department. So first inventory valuation will be there, that store is empty or whatever the stock available. Based on the store department will be request to purchasing department. Purchasing department, they will take the authorization and they will send order to the suppliers.
Exactly. This is how, what he exactly said is this, that first of all, the people in the stores or the warehouse department, they will be telling, okay, we are short of material, you need to order more. So they will raise one document known as purchase requisition. Purchase requisition will be raised. They will be saying, okay, this is the quantity that we need. The purchase department will make an order. The order will come in, and then accounts department will be waiting for the invoice to come in so that they can make the payment for the purchases. We have a complete chapter on source documents where we will be talking about the documents in detail. So you don't need to worry about if you're not understanding the terms purchase requisition, purchase order, invoice and all of those things. So don't worry about it. We will be talking about that in detail in a coming chapter, that is of source documents. So we will be having detail about documents over there. Now the third one is paying expenses. Expenses. What kind of expense an organization can have apart from employees, because employees is a completely separate thing. We will be although it is an expense, we will be talking about that separately.
Office requirement or some expense, that kind of.
Yeah, office requirements, electricity bills, telephone bills. Then we have sundry expenses, petty expenses, small expenses, big expenses, depends from rent of an office. So all of these expenses you need to, even if you are doing a business from your home, you will be having an expense for the business. Let's say you are doing business over an internet, so that internet expense, the cost of the internet will be the expense for your business. So you cannot run a business without having certain expenses. So you need to pay for those expenses, right? So we have to pay the expenses in order to run our business properly. The next thing is paying employees. Now let's say this institute does not have any employee. I'm not an employee. You would be sitting over here, no teacher. So how would it look? Obviously very awkward. That no employee, no nothing, just sitting idle. Okay, someone will come and teach us. So the thing is, you cannot operate an organization without having employees. Although now we are more moving towards mechanization and more technology is involved in the processes of an organization, but then again, to operate those machines, to operate those computers, to operate those processes, you need to have humans. And those humans are the employees of the organization, and the employees has to be paid on a fair basis by the organizations, right? And just don't consider this word right now. Some of you might know that is non-current asset. Non-current asset, don't go into the detail of non-current right now. Only talk about asset. We will be talking about asset as well on the further slides. Now you need to purchase the assets in order to run a business. Now, as I was giving you an example, that even if you want to run a business from your home, you need a computer. That computer is your asset of the business. If I want to run this organization, if I want to run this institute, these tables are the assets, these lights are the assets, this projector is the asset, this computer is the asset, this tablet is the asset. So you cannot run a business without having assets in your business, right? Now moving on further, there is a concept of centralization and decentralization. Now when we talk about organization, we have talked about the chart of an organization, that according to the chart you would be discussing that okay, he is the top level management, then the middle level management, then the low level management. So when we talk about this chart, we can link the organizational chart to the concept of centralization and decentralization. First of all, we will be talking about centralization. Centralization means that a single person, if it is a family owned business, obviously the single person will be heading the business, or if it is a public company, some group of people will be heading the company. So a single person or a group of people heading the organization and giving the instruction to the rest of the people working in the organization is known as the centralized structure of the organization. That only few people or only one or few of the people are allowed to take the decision, and that decision will be imposed, will be implemented on rest of the people working in the organization, right? So if you look at the definition, what does it say is, centralized organization rely on one individual to make the decisions and provide direction for the company. Small businesses often use this structure since the owner is responsible for the company's business operation. Now if it is a small business, it's a private business, so the person who has started the business will be the owner, and he will be having a centralized structure in the organization. I am the head, what I will say will be followed in the organization. Even if it is a big company, you can say CEO is the head. Whatever CEO will be deciding for the operations of the organization, that will be implemented into the organization, right? Now what advantage can we have of this structure? The first one, The first advantage of centralized structure is that you won't be wasting time in taking decisions. You won't be wasting time in taking decisions. Let's say if we have a different structure, decentralization, which we will be talking after that. So you will be asking, CEO will be asking MD will be asking manager, general manager, then senior manager, junior manager, then supervisor. How long will it take to take one decision? If a company have a long chain of command and you are asking each and every person, okay, what should we do about this? What should we do about this? What should we do about this? So it will take you 1 month to take one decision. So that's the benefit of centralization. You take quick decisions like this. Okay, this has to be done. Okay, yes, do it. This has not to be done. Don't do it. Finish. Then the disadvantage of centralization is that, let's say, I always give this example in my class, that let's say we have a mock tomorrow, right? Not actually. Let's say we have a mock tomorrow and I'm the one saying, okay, we have a mock tomorrow. So centralized structure. No, you can say no opinion from you guys, no suggestions from you guys. You are the students, I'm kind of a dictator kind of a person, okay, we have the mock tomorrow. But what that will do, that might have a bad image of me on you guys, that you might feel that, okay, this person is a very strict person and does not need to take our recommendation, our suggestions, our opinions. That might be a bad thing. So similar is the case in an organization, that if a person heading the organization takes the decision solely, then the employees will be demotivated to some extent, because it's not always like this. All the employees will always be happy with whatever decision the management takes, right? So sometimes consultation with the employees is necessary, which in centralized structure will not be possible, because the management or the CEO or the owner of the business will solely be taking and implementing the decision into the organization. So employees might get demotivated, that they are not given importance, or their opinions, their suggestions are not given importance in an organization. Now let's say 10 to 15 people are sitting in this room. Some might be good in Excel, some might be good in cricket, some might be good in football, some might be good in PowerPoint. A single person, me, cannot have all the qualities that each one individual of you might possess. So if I am taking the decision in an organization, I cannot look at any one particular area that the way that you might look at. So that's another disadvantage of centralization. Now let's say if you talk about this in the perspective of an organization, so a person is good at sales. If I talk about sales manager, he would be heading the sales department. He would know about sales more than the CEO. Obviously, the benefit of centralization is that you can look at the company as a whole. Okay, fine. But on the other side, the disadvantage is that the person working in that particular area would be more expert than the person looking at the organization as a whole. So he could have give you a much more better advice than whatever decision you are taking in certain cases, right? So let's say I have done ACCA. Okay, I have done ACCA, but I might be good in management accounting papers. So I can tell you better about management accounting paper rather than financial accounting papers, though I have done ACCA, but my expertise is management accounting. So it's better to take advice, which we will be talking about in decentralized structure of an organization. In decentralized structure of an organization, the management, the people running the business takes advice, takes suggestions, takes opinions from all the heads of different departments of the organization, and then they take a particular decision. Now we look at the definition, which says that decentralized organizational structure often have several individuals responsible for making decisions and running the business. Decentralized organization can rely on a team environment. If you have more than one group of people working towards the benefit of the company, you have a team and you can rely on the team. And the environment itself is a kind of a team environment that whenever you want to do something, okay, what's your opinion about this? What's your opinion about this? It's a kind of a confrontation, right? Now, advantages and disadvantages of decentralization. Decentralization, the disadvantage of centralization will be the advantage of decentralization, and the advantage of centralization will be the disadvantage of decentralization. How? We can say that we discussed that in centralization employees would be demotivated. That would be the disadvantage. So in decentralization employees would be motivated, or at least the managers would be motivated, because their opinion would be given weightage into the organization. Like if I am continuing the same example, if I ask you guys, okay, what's the date that we should keep the mock on? Some might say Saturday, some might say Sunday, some might say Monday. Okay, then we reach a consensus. Sunday is fine. Some might be unhappy, some might be happy, but at least you would be happy that the teacher is giving our opinion importance. So the first advantage of decentralization is that the employees will be motivated. Employees will be motivated. Then we can say, moving on towards the expertise. You can use the expertise of the manager working in a particular area. Sales manager would be giving you a better advice about sales. Finance manager would be giving you a better advice about finance. Marketing manager would be giving you a better advice about marketing. So we can use the expertise rather than one person taking the decision. Disadvantage, it will be a long chain of command. We will take a longer time to reach to a result, reach to a decision. Now, if I am only the person taking decision, I can take it in 10 seconds. If I would be talking to you guys to tell me about your opinions, it might take 15 to 20 minutes, because I would be asking each one of you individually. So it's time consuming, the first thing, and it might, whenever the thing is time consuming, it even costs more because of the time. So these are the disadvantages of decentralization. Policy manual. When you are working in an organization, there are certain policies and procedures that you have to follow in an organization, and policies and procedure can vary from business to business. Now, policy manual is a document that is possessed by the HR department or produced by the HR department, which tells you that what are the responsibilities of an employee when they are initially inducted into the organization, what is the code of conduct, how would you behave in an organization, what will be the professional behavior, and what you need to do in certain situations. Like example, we can have guidance. It will give you guidance. It will give guidance to the employees. Let's say on holiday entitlements, that after every 11 months, 1 month will be your holiday, 21 days paid, 25 days paid, 30 days paid. So it can give you guidance on the, because you cannot say, okay, let's give this employee 21 days paid, let this employee give 25 days paid, let the employee C get paid 30 days paid for his holidays. No, policy would remain same for everyone. So that's why you create policies. Okay. Second thing, training and instruction. Let's say you have initially inducted into the organization. I came here in 1 year back. So when I was initially inducted over here, I was being trained that how to conduct the lectures, how to use the graphic tablet, how to talk to the people confidently, right? So these are the things. If I tell you about a manufacturing business, an employee would be inducted, they will be telling you this is how you operate the machine, this is the target that you set for a day, this is the number of units that you have to produce in a day, this is the number of hours that you would be working, this will be the break hour in which you can have lunch. So training and guidance. Uniformity of approach means all the employees will be subject to same discipline. It does not mean that, okay, you can have break at 3, you can have break at 4. No. All employees having break at 3 to 4. That's it. Uniformity. Meeting legal requirements. Policy manual will be outlining the legal requirements, the health and safety rules, that in an organization there has to be fire extinguishers, and if there is a scenario of panic, how would you behave, where is the exit, if there is a scenario of fire, what you need to do, how would you move out from the exit of the building. So these are the areas that will be touched by the legal requirements. Health and safety rules, that what are the rules, that let's say in Qatar you can have example like if the temperature reaches 50 degrees centigrade, the labor working in construction are allowed to have off, because you cannot work in a temperature like 50 degrees centigrades. So these are the health and safety rules. If you breach that, you would be penalized for that, right? Maintenance of operating standards, that the product you are producing has to be of good standard. Standard means that this is the quality. Let's say take an example of BMW, take an example of big car companies, Mercedes, Bentley, Aston Martin. So they have a standard. If they start producing a car like Suzuki Mehran, so obviously their standard will go down. So they have set their standards. Right, they have set their standards that, okay, this is the particular standard, our car will be of this standard, the paint might be this one, the tires will be this one, the engine has to be this one. Okay. Maintenance of efficiency. Now, if you are producing good product, does not mean that you take 1 month to produce one car. Now, efficiency has to be there. Whatever set time limit is there, you have to make the product in the given time limit. Maintenance of security. How to use computer password and backup procedures. Now, whenever you are in an organization, like these are my notes, these are my slides. Now, I don't want any other person to take out my slides and start using it. So, for that purpose, I will be like having password on my PC protected, the file might be protected. And if you're working in an organization, you have a lot of documentation, a lot of confidential documentation for which you need to respect the confidentiality of those documents, right? Now, let's say you are having a prototype of a new product that you will be launching. So whatever the specifications are there of that particular product, you need to keep it secret so that it doesn't get out and get in the hands of the competitor. Right? So you need to maintain the security of the documents of your organization. Now, continuing the same example of Unilever, working in 4 or 5 continents, how many transactions will they have in a year? Billions, millions, even trillions. They can have transactions in even trillions. So if you are working globally, you can have a lot of transactions. Now, if I am making 100 transactions in a day, there's a possibility I can make an error in it. Instead of writing 235, I might write 253. Human error, that can exist. You cannot stop human errors to do. So, you need to have certain control over transactions. Now, if you are saying that Unilever are having millions of transactions, so they can say at the end of the year that, okay, we were having millions of transactions, so please allow us 10% mistakes. Obviously not, right? So that cannot be the case. So your transactions can get affected by 3 things: human errors, unauthorized transactions, someone deliberately trying to manipulate the amount or the transactions, like giving the credit of Mr. A to credit of Mr. B. Ultimately, it's a credit, your accounts will balance, but the account of A is not account of B. You have to record the transaction into the proper place. Fraud, deliberate manipulation of the accounts. So these are the 3 things which might affect your transaction, and for that you need to have control over your transaction, so that that the errors, unauthorized transaction and fraud can be controlled, can be minimized. Look guys, now you might argue with me that if we are having these controls, we can completely eliminate errors or fraud. No, we cannot. Even if you try to, let's say you have the best controls. I have one student who is working in the audit firm. He has one client. I'm not supposed to take the name of the client. So he told me that they were having very good controls over the transactions. But does that mean if an organization have a good controls, there is no chance of error? There is always chance of error. If not deliberate, then undeliberately, right? So we need to have control over these transactions, and the control can be the first thing, authorization. Now if I am making a payment above $1,000, it has to be authorized by two persons. One manager, then the senior manager. If one is involved in fraud, not necessarily the other will be also involved. So it might stop the one person who is trying to make a fraud from the other person's authorization, because if I am trying to misinterpret, if I am trying to mislead this transaction, the other person might catch me, right? Then we have completely recorded. Transactions should always be completely recorded, and the third point is, which is linked to this one, that is accurately recorded. That if I am writing, let's say if I am making a sales, so I might write a transaction cash debit sales credit. I only write cash, not sales, so it's not complete. So obviously that might cause error. And if you are writing cash debit sales credit, complete is there, but it's not accurate. Instead of writing 100, you are writing 10. You are missing out 1 0. So again, the transactions will be distorted. It might be misled. So you need to have proper authorization. Transaction should be complete, accurately recorded. And the fourth one, very important one, segregation of duties. Now if I am the head, let's say if I want to purchase material, first of all, stores manager will come to me, say, okay, this is the material you need to purchase. I am working in a purchase department. I will go to the purchasing departments, relevant people, that this is the material the stores requirement asking us, and we need to purchase. They will find a supplier, we will buy from them, and then accounts department will pay them. So if I am the head of stores department, I am the head of purchasing department, I am the head of accounts department. All three departments are under me. So it will be easier for me to make a fraud. It will be easier for me to hide any transaction. But if instead of 10 people are involved in this complete process, so it will be difficult for me to make a false transaction, or it will be difficult for me to make a fraud, right? So it's better to have duties segregated. Segregate means distributed. Okay, you will place the order, you will receive the order, you will make the payment, you will authorize the payment. So the duties has to be distributed among the different people. So it will be, okay, let's say if one person in this class is marking the attendance, so he might mark the attendance of his friend as a present, just an example. But if different people are checking that, so they might catch it, okay, no, this person was absent in the previous class, how it is marked present. So when your duties are segregated, it's easier for you to identify the fraud. Okay, and examples that we can have: authorization of purchase of non-current asset. Whenever you are purchasing a non-current asset, it has to be authorized. Okay, this is the, let's say if I want to purchase a projector for this room, I have to go to my management, please authorize the purchase of a projector for this room, because they might ask that for what you are needing a projector, it's already installed. I might say, okay, this is not working properly, then they will come and check, okay, it's not working properly, install a new one, then it's good. Or you can say authorization limits in place, that there has to be certain limits. If authorization is there, okay, yes, authorized, but the authorization has to be under certain limits. It's not like that if the revenue of the company is 100,000, you're authorizing the purchases of 200,000. Okay. Credit checking of new customer. We have already discussed that whenever new customer comes in, you have to check the credit worthiness of that whether the customer will be able to pay us back or not. Okay. All right. The next thing is double entry bookkeeping. Double entry bookkeeping. Very basic concept of double entry bookkeeping. How many of you know? How many of you are from engineering background? Engineering background. Okay, so you might have studied physics. So in physics, you might know the third law of Newton. That is, for every reaction there is an equal and opposite reaction. So similarly in accounting we have this law: for every debit there is equal and opposite credit. So now you might ask me that what is debit, what is credit? Debit and credit are only two sides of the transaction. They have taken from the Latin words in which debit means left and credit means right. That's it. Okay. You work in accounts department. Okay. So you know that for debit, how many of you know that for debit we write DR and for credit we write CR? Okay. Good number of people. Good number of people. Why? We write CR for credit. Why do we write DR for debit? Why don't we write DB? There is no R in debit. Why do we write? Sorry? Okay. Exactly. Where does it come from? Any answer? Debit revenue. What about expense? DE, debit expense. No one? Never focused on this point? It's basically debit to register, credit to register. That's why it is DR and CR. It's not CR because of credit. It's debit to register and credit to register, because you know that previously we were not having this computerized accounting system. So they recorded, accountants used to record the transactions in books, in registers. So there was a complete registers or books of entry known as books of prime entry. So when they initially make a transaction, they say, okay, this is debit to register, credit to register. That is why DR and CR. Okay, so don't forget, no one knows it, by the way. Most of the people, most of the accounting teachers doesn't tell you this because they themselves don't know this. Okay, so debit entries, whenever you have increase in asset, it will be debited. Whenever you have increase in expenses, they will be debited. But before talking about this, let's look at the pillars of accounting. 5 pillars of accounting we have: assets, liabilities, equities, income and expenses. Okay, asset, liability, equity, income and expenses. So when we talk about the pillars of accounting, asset is a resource controlled by an entity. Like we talk about these tables is controlled by Excellence Training Center. So it is an asset for the Excellence Training Center. So asset is a resource which is controlled by an entity and which will result in a future economic benefit. Which will result in a future economic benefit, or means it will result in future economic inflow. Like we are using these tables, so that are providing us benefits. Students are coming, they are using it, they are sitting on, they are using, okay. So that's a benefit for the company. Similarly, if you purchase a machine for the company, you are making products from that. And those products are being sold into the market and you are getting revenue. So that is your asset, right? A resource controlled by an entity which will be providing benefit to the organization, right? Now, moving on towards liabilities. Liabilities, we can say, are the obligation. Liabilities are the obligation of the organization as a result of past event. Now, what I am trying to say, as a result of past event, your liability will be occurring only because you have purchased on credit previously. So that is your past event. A liability is the obligation of an organization as a result of a past event whose settlement will result in economic outflow, right? When you will settle the liability, when you will settle the obligation, there will be an outflow of the economic benefits going out from the company, most probably the cash. So when you settle your liability, cash goes out of the company. Equity is the residual interest in the assets after deducting the liabilities. Now what I am trying to say, exactly. So for the accounting equation that we have is asset minus liabilities gives you the equity. Asset minus liabilities gives you the equity. So that is your basic accounting equation. We will not be going into this detail because this is not your financial accounting paper. This is your management accounting paper. Our focus will be mostly on management accounting, not on financial accounting, but just giving you an overview, right? Then the fourth one is income. Income, whatever amount you are generating by making sales, that will be your income, by making sale of anything, either your products or non-current assets. Expenses, we have already discussed. When you run a business, you have two kinds of expenses: capital expenditure, revenue expenditure. We are not going into that detail, right? So when you run a business, for day-to-day operation of the business, there needs to be certain expenses: telephone expense, and you can say like electricity expense, paying the employees salaries expense. So all of these expenses are there. So in order to run the business, you need to have expenses, and by running the business you will be generating some revenues, that will be your income, right? Now we have discussed about the pillars of accounting, which are 5 pillars: assets, liabilities, equity, income and expenses. Now we were discussing about the double entry bookkeeping. So we know the basic concept is that for every debit there is a credit. Now let's say we can take some examples. Some of the examples might be, let's say if you are buying something on cash, so the asset is coming in, let's say car, you are buying a car is coming in, so car will be debit and cash is going out. So cash is going out, so one asset is coming, other asset is going. So car will be debit and cash will be credit. So if you look over here, we have debit entries, we have credit entries. When asset increases, it is debited. And please guys, don't keep this thing in your mind that debit is increase and credit is decrease. No. How? I will tell you. Look, debit, asset increases, debit. Expense increases, debit. Asset decreases, credit. Expense decreases, credit. Okay, till here it is fine. Now when liability increase, when equity increase, when income increase, so that will be your credit. Increase in liability, increase in capital or equity, increase in income will be your credit entry, not debit. So if you have, those of you are from the accounting background and have this concept in your mind that debit is increased, credit is decreased, please remove it in this first class. You are going to face a lot of difficulties if you will be having this concept in your mind that debit is increased, credit is decreased. For particular areas, for particular elements, we have particular treatment in debit and particular treatment in credit. Let's say asset increases, it will be debited, right? Asset increase, debit. Expense increase, debit. Asset decrease, credit. Expense decrease, credit. Now moving on to the other side, that is capital increase, credit. Liability increase, credit. Income increase, credit. Moving on to the other side, that is liability decrease, debit. Capital decrease, equity decrease, debit. Income decrease, debit. Okay, everyone is clear on this point? Now we are not going into the, yes, anyone? Okay, now we are not going into the further detail, and here you have the accounting equation, that is your basic accounting equation. Asset minus liabilities will give you capital. Capital, for your information till now, keep it as the amount invested in the business by the owner itself. Plus, if there will be any profit, that will be added into the capital. And if there are any drawings means that you take out something from the business, either in form of cash or in form of goods. So that will be subtracted from your capital, right? Sorry? Exactly, that is the balance sheet equation. So asset minus liabilities gives you give you capital, plus any profit minus any drawings, right? Now moving on further, we have books of prime entry. Prime means major. So the books of prime entry are those books where when the transaction is taking place in the first place, that a new transaction comes in, it takes place. Now the first place where I will record the transaction is the book of prime entry, right? From the book of prime entry, they will go into ledgers. From ledgers, they will go into trial balance, and from trial balance it will go into the balance sheet or the income statement, right? So we have certain books of prime entries. Books of prime entries are those books where the transaction first taking place is recorded. So the first book of prime entry is sales day book. Now sales day book will only have those transactions which will be on credit sales. Credit, not cash, not cash. Credit sales will be recorded in sales day book. Only credit means you are selling something to someone, selling some goods, selling some inventory, selling some merchandise, whatever your main product is, selling to a customer, but you are not getting money right now. You will be getting your cash after some time. So this is a credit sale. So whatever the credit sale will be, it will be recorded in sales day book, right? The next is sales return day book. Now it might be a case that you have sold certain products to a particular customer, they didn't like it or they were a fault in that, so they returned it. So those sales returns, when sales will be returned, those sales returns will be recorded in sales return day book. Everyone is clear on this point? Similarly, we have purchase day book. We will again record only credit purchases in purchase day book. We will only record, like we are purchasing from our supplier, we will be paying on later. So that purchases, credit purchases will be recorded in purchase day book. And purchase of what? Only purchase of inventory, not non-current asset. Only purchase of inventory will be recorded in purchase day book. Now there might be a case like this time we are the customer, we are returning the goods. We are returning, okay, we are not happy with the quality of the goods that the supplier has provided us. We are returning the goods, and those purchase returns will be recorded in purchase returns day book. Similarly, we have cash received book. All the transaction when we receive a cash will be recorded in cash received book, and when we make a payment on cash will be recorded in cash payment book. We have one more book, that is petty cash book. Petty means small. So let's say there's a small cash transactions on food expense of the employees, daily food expense. So that will not be recorded in a normal cash received or payment book. That will be going out from a petty cash. Some amount of petty cash is determined by the company, kept in the petty cash account, that this is the amount you should take for petty issues. Petty means small issues. So that will be recorded in petty cash book. Everyone is clear on the books of prime entry? Great. Now cost accounting, the major topic that we have to discuss in this course is cost accounting. So as the definition suggests, cost accounting is the accumulation of cost for inventory valuation in order to meet the requirements of external reporting and for internal profit measurement. Two purposes are there for cost accounting. We discussed about management accounting. Now we are talking about cost accounting. Cost accounting means to identify or to calculate or to formulate the cost of the product that you are making in an organization. Right? You are making a product in an organization, you identify the cost of that product. But if you don't know cost accounting, you can never make the cost of that product. And if you are not making the cost, if you are not making the proper cost of the product, you can never earn a profit on the product you are selling, because you will never be able to set a correct selling price. Okay, you will never be able to set a correct selling price, and since you are not setting a correct selling price, you will be ending up making a loss. Okay, so if you can see, inventory valuation, first requirement. The first requirement over here, I'll highlight it. Inventory valuation. Now, if you are not able to produce the correct cost of one unit, can you value the inventory present in your warehouse? Now, if let's say you have 5 notes of 100 real in your pocket, right? So that a child is there in front of you and you give those notes, currency notes, to a child, but the child doesn't know that what is the worth of one note in your pocket which you have given to him. Will he be able to identify the total amount in your pocket? No. So same is the case over here, that if you are not able to calculate the cost of one unit, you don't know what my one unit is costing me, you will not be able to calculate the total value of the inventory in your warehouse. So the first requirement is inventory valuation. Where do we take the value of the inventory in our financial statements? Where do we take the inventory in our financial statements? You know that there are 2 financial statements, just 2 we are discussing right now. Income statement and balance sheet. Income statement and balance sheet. So where will we take the value of inventory? Those income statement, okay, in cost of goods sold, closing inventory, okay, and in balance sheet we will be taking inventory as a current asset. So the point is, if you will not be able to calculate the value of the inventory, your financial statements will not be complete, will not be balanced. The second requirement is the internal profit measurement. You need to calculate the profit, and if you are not able to set a correct cost, You will not be able to set a correct price. Then because of the price, you will not be able to identify what amount of profit you are earning. So two purposes are there for cost accounting: inventory valuation and profitability. Okay, don't forget, two purposes are there for cost accounting: inventory valuation and to identify the profitability. Now when we are talking about cost accounting will produce information for financial as well as management accounting. Now what I am trying to say, we will be identifying the differences between financial accounting and management accounting, that what are the particular differences in financial and management accounting. So the data which is being produced by cost accounting, which is the cost of a product, you can use that in financial accounting or financial accounts as well as management accounts. Like in financial accounts, you can use that in, as we discussed, the value of inventory goes in balance sheet, it goes in income statement. So those are financial accounts because they are published into the market. If you go and search on the internet that any listed company, let's say P&G, Unilever, you can find their published accounts, and in those published accounts, in those financial accounts, you will have income statement, you will have balance sheet, you will have cash flow, you will have notes to the financial statements, everything would be there. But if you search on internet budgets, if you search on internet's variance reports, you will not find these for any company, because these are internal to the business, and whatever is internal to the business is management accounts. Right? So management accounts are those accounts which is internal to the business, and financial accounts are those accounts which is external to the business. Means you are preparing for the people who are external to the business. That if you want to invest in Unilever, you will go on internet search, okay, what is the value of the share? Okay, this is the value. This is the profit of the company. They are earning profit. I should invest. Right? So published accounts are the financial accounts. They are prepared for external purposes, and management accounts are the accounts which are prepared for the internal purposes. Okay, so the point was that you can use the data from cost accounting for management accounting as well as for the financial accounting. Now there are two accounting systems. As we know now that financial accounting is separate from management accounting. So we have two accounting systems, that is known as the integrated accounting system and interlocking accounting system. Integrating accounting system means that only one ledger. The term ledger means book. The term ledger means book. So only one ledger is maintained for financial accounting as well as for the management accounting. Means whatever financial transactions are there, you are recording in the same ledger, and whatever management transactions are there, you are recording them in the same transaction. No separate ledger is maintained. So at the end of the period, at the end of the period, when you will be calculating the profit, since one account is there, how many profits will be there? Only one. Because same book is maintained for financial data as well as for the management data. So there will be only one profit. Total one profit. Total. When we talk about interlocking accounting systems, in interlocking accounting system, we have two separate ledgers. One for financial accounting, one for management accounting. So financial accounting transactions goes into financial ledger, and management accounting transaction goes into the management ledger. So at the end of the period, how many profits are you gonna have? Two profits would be there. One profit would be from financial ledger, one profit would be from management ledger, and then you would reconcile them. Then you would match them, then you would reconcile them. Now tell me guys one thing, if integrated accounting system is used, will there be any need for the reconciliation of profit? No. Why? Because you only have one ledger, one profit, no other profit to reconcile with. But when we talk about interlocking, in interlocking you have two. So when you have two, you have to reconcile both of them. Right? So moving on further, we have computerized accounting system. How computers can help us in today's management accounting systems. So this is the complete process of management account, normal computerized accounting system, that how you would use a computerized accounting system into the management accounting system or the businesses. So obviously, first of all, you have input of data. Now input of data can be anything, numbers, figures, calculations, whatever data you are gathering, right? Now then you process that data. Then you process that data to turn into a meaningful form. Now processing over here, you can also write, computer files are there, so you can also write storage. You store the data, you process the data, right? You also store it, and in the end you have the output as form of the information. So let's say 10 to 15 people are there in this room. I take the heights of each one of you, right? I take the heights of each one of you. So that will be what? A data for me. I will gather the data, then I will process it. That, okay, this is the average height of boys in the class. This is the average height of girls in the class. So that will be my output. So three stages were there. I gather the data, input it. Then I process it into the form that I want to have, and that in the end I had the output. So same is the case over here. In accounting, how this computerized system helps is that you have different transactions taking place in the organization, and transaction takes place at the first instance, then the computer processes that transaction. I'll give you one example of ATM machine. Right? ATM machine is there. You insert your card, so that relevant information about your card is processed by the computer. You take out the cash from your account, so you input some data into the machine, your code, your amount. So that was your data. The machine processes it. Okay, whether the relevant amount is available in the account or not. Okay, yes, it is available. So that the machine confirms from you, do you want to proceed with the transaction? You said yes, the cash comes out, your account is updated. So that is your output. Output is cash and your account is automatically updated because of the processing of the data. So you input. So input was your code, your amount. Then computer processed that whether the amount is present, and in the end you have the output, you have the cash with you, and your accounts are updated automatically. So this is how computers, and you know guys, now the distinguishing feature, how will you distinguish yourself or differentiate yourself as a financial accounting, as a management accountant, or as a finance person from any of the other person or any person sitting beside you? What will differentiate you? What will be the differentiating factor? That if I am the employer of an organization, right? I am the employer of an organization and 15 people comes to me and I'll say that I'll hire this particular person. Why? Yeah, or I can say that I'll hire this particular person, I hire this particular person. What will be the distinguishing feature that will force an employer to hire you, not the other person or the other candidate in the queue? As an accountant, because now the number crunching part, the crunchings of the number, plus, minus, division, multiplication, that can be done by computers. Why will there be a need for an accountant like you people? Why? What will force an employer to hire you? if the computer can do the same work as you can in a very fast manner compared to you? What do you think the quality you should possess in order to be hired as an accountant? Any idea? You can say anything.
Analyze.
Exactly. The interpretation of the data, the analysis of the data, how to read the data. Now, look, guys, there are a lot of softwares and there are a lot of people who are building tailor-made softwares for the organizations. They don't need people who just know how to calculate, those who just know the clerical work. No, companies does not need people, those who know clerical work. That can be done by computer. They don't need humans for that anymore. Now, what the computers cannot do and human can do is the interpretation of the data, is the analysis of the data. So when you are, now all of you are at your starting stage of your accountancy career or of your finance career. Now the thing is, when after 3 years, 3.5 years, when you are a qualified accountant, inshallah, so the feature that will force an employer to hire you should be that part of analysis. That when you look at the financial statements, you should be able to analyze the performance of the company. Okay, because of this factor, I can say the company is not performing well. Because of that factor, I can say the company is performing well. Can a computer do that? Yes, it can. But then computer can operate within a set defined limits. Computer can operate in a defined limit, but a human brain can operate beyond that. How many percent of brain does a human being use? A normal human being use in his complete life?
10%.
Say it again.
How much percentage of your brain do you use in your whole life? A normal person.
Less than 10.
Less than 0.5.
No, that's too less, man. It's around 4 or 5%. Around 4 or 5%. So the 95% of the human brain is unused. So you can analyze, or you can imagine how much potential God has given us in our brain. So if you only use it, we can achieve more than what we think of, right? So
People use it as the wrong way. Destroy the world.
okay, so the point over here is that the distinguishing feature that you need to have in you is the analysis, interpretation of the things, that you can interpret things and always have this why factor in you. Why? If someone is saying you go straight, you should be not like this, okay, you start walking straight. You should ask why. Why should I go straight? If there's a reasonable evidence, reasonable reason for that, then okay, yes, I'm going. It's not like that you should be like, no, I'm not going. Why? You should be not like this, but you should have that skepticism in you, that why I should do this. If it is, you should be able to analyze situation. If it is beneficial for me, yes, I'll do it. If it is not beneficial for me, no, I'll not do it. That's the thing you need to have, the analysis. Okay, benefits of computers over manual system, very common ones. Faster provision of information. You can access the information in a much more faster manner. Provision of information that would not be easily available without a computerized accounting system. As you know that now we have a lot of accounting softwares. QuickBook is there, Peachtree is there. A lot of accounting softwares are there on which accountants are working. All they need to do is enter the information. All the other accounts are updated automatically, because they are designed, the softwares are designed in this manner that they do the work of 10 minutes into 1 minute. So they save time, they save cost. That's the next point. Once the system is set up, cheaper information. obviously the initial setup cost will be higher, that you have to buy the software, you have to install the software, you have to make it operational. But after it is set up, instead of needing 10 employees, you will be needing only 2 employees to operate the system. Because previously you would have 10 employees for 10 different things. Now you can have like 2 employees doing the same work of 10 people with the use of computers. More accurate information, because arithmetic and certain other errors will be eliminated. Because when you're working, my father used to work in a bank. He has like 30 years of experience in banking, and initially, like when he started his job, so there were manual books in which you record the entries and the movements of the checks and cash. So they were prone to more errors as compared to the accounting system. But the only drawback in accounting system is that if you enter a wrong amount at the initial stage, that will be wrong throughout the complete process. But then again, in computers, it's much more easier to rectify the errors than in the manual records, right? So these are the benefits that computer have over the manual system. We have 2 types of data. When we enter the data into the computers, we have 2 types of data. One is the transaction data that is continuously changing, like amount. You cannot expect to have same amount from the customers. Like let's say when I call Pizza Hut for a delivery, they have my details because I've already ordered before. So they store my details as a customer. They make a customer list, right? They store my details. Now they have my details. Now my details would be same, most probably, only if you does not change your details, like my phone number, my address, my name will be the same. So that will be coming under standing or reference data. But let's say at first order I did 1 large pizza, then second 1 medium pizza, then third one 2 medium pizzas. So the data that is changing continuously, the transaction data, the amount will be the transaction data which is continuously changing, not same. But my name will not change. That is why how they will identify me. I'll call, okay, pizza, so they, okay, Mr. Josefa, what would you like to have today? So that's the reference data or the standing data which is not changing, right? Processing of data, the last topic of this chapter. We have 2 kinds of processing. One is batch processing and the other one is the real-time online processing. Now when we process the data, we process them in 2 different manners. Batch processing means that you gather the data for a certain time period. I'll give you a best example. Both of the examples are related to bank. Okay, both of the examples are related to bank. If you have ever gone to a bank to deposit a check or to withdraw amount from a check, so the person, the teller sitting on the counter will take the check from you. They will put it in a big needle where all the checks will be accumulated, and then they will process all the checks at the end of the day to update the accounts. That is called batch processing. That you make a batch of transactions and then update it. Now let's suppose those checks are updated into the accounts after 1 week. On every Saturday, the accounts are updated. Now, if I want to know the balance on Wednesday, the drawback of batch processing is that it will not be updated. It will not be updated because it is updated after a regular interval, after a fixed time period. So it is updated after a regular interval, fixed time period. So it will not be updated on some other day apart from the day of updation. But as far as real-time online processing is concerned, it is updated at the time the transaction is taking place. Your ATM machine, that is real-time online processing. You take the amount out, you get a slip of the remaining balance. So your remaining balance is coming because your account has been updated at the same time when your transaction has taken place. So real time means at that particular time when the transaction is taking place, and online, because you know that the transactions are online, which are updating online. So you can take an example of eBay. If you buy something online, you enter your credit card number, you buy that, your order is processed and the amount is automatically deducted from your account. So that is online processing, real time online. The change is occurring at that very moment. And in batch processing, first we make a batch of transaction. Now batch can be for 1 day, for 1 week, for 1 month. If it is, let's say in exam you get a question that person makes a batch of transaction every day and enter the data or update the accounts at the end of the day. So don't consider it as a real-time online processing. No, real-time online processing is that processing which is updated at that very moment. But batch processing is updated at after a regular intervals, and that intervals can be day, week or months. Right? So that's it from today's chapter.